Hello and welcome to Portfolio Matters. In today's brief podcast, we will be talking about the growing crisis in China surrounding the property developer Evergrande and its imminent default. But before we get into it, Stuart will read the disclaimer.
Everything discussed during the Portfolio Matters podcast is for informational purposes only and should not be considered as investment advice. Listeners should be aware that we will be discussing securities that we own or have a financial interest in. Please do your own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. The views of any guests we may have on the show are entirely their own, may not be representative of the views of Portfolio Matters. A full disclaimer can be found at the end.
Thank you, Stuart. The enormous Chinese property developer Evergrande is in difficulties, and the price of its bonds have fallen below 30 cents on the dollar, and it looks like it is going to default on something like $300 billion worth of bonds. So what are the implications for China, for Chinese credit markets, and for global markets as a whole? Well, the first thing to say is that the Chinese economy has been slowing, and whether that is because of difficulties in the property markets or whether the difficulties in the economy are caused by the slowdown in property, we don't know, but the two are definitely related. So in this chart, you'll see the expected GDP growth in Q3 has been revised down strongly from an expected 6.4% in May to 4.9% now, so quite a big drop. And Q4 has similarly been downgraded. And so you're looking at expectations that the Chinese economy will slow to GDP growth of around 4.5% by the end of the year from its historic levels of 6% plus. And a symptom of the slowdown is that Chinese property sales are down 20% year on year. And the difficulties that Evergrande is experiencing should be thought of in that context. Slowing property sales means slowing revenue and stress for heavily indebted developers like Evergrande.
Keith, I was listening to a very interesting podcast from Bloomberg called Odd Lots, and they've been going through the Evergrande story in great detail. So I know nothing directly, only really from their commentary. But one thing they've been very clear on is that there's, as you said, a very complex interrelationship between, for instance, the property developers and the local government. So local governments in China have to balance their books, and one of the ways they have done that is through land sales at sometimes advantageous prices, shall we say, to developers. So any slowdown in the economy leading to slower land sales will also have an accelerating effect on local government.
Absolutely. And one of the ways that Chinese local governments have raised revenues, as you say, is through essentially corrupt and opaque land sales to pet developers. Now, if those sales aren't possible, then it is possible that you will get a credit crisis amongst local government and local government enterprises. Well, this whole sector of the Chinese economy is essentially state-owned enterprises, which have very high employment levels and probably lose a lot of money, but it's an incredibly opaque system. Going back to Evergrande, the fate of Evergrande was essentially decided in Beijing back in mid-2020 when Xi Jinping announced the 3 red lines for property developers. Now, he was concerned that the whole of the property development segment was getting over leveraged and was therefore becoming a threat to the financial stability of the state. And therefore, he announced 3 red lines. So property developers had to have a ratio of liabilities to assets below 70%. Their net debt to equity ratio must also be below 100%, and the ratio of cash to short-term debt must be above 100%. Now, those are all very sensible, but how do you get enormous, heavily indebted property developers to adhere to those ratios when they are currently above it? The only way is for them to raise cash and cut their liabilities by not taking on any more debt. So that means they have to sell properties and they have to slow their rate of growth. So if they all start to sell properties, that sends the price of property down, presumably, and can exacerbate any difficulties they may be having. As Evergrande has experienced difficulties, and we now know that it is having trouble paying its debts, it was going to default on its domestic debts, and it has defaulted on payments on its international bonds. So the market has extrapolated those difficulties into other Chinese high yield companies. So this is the yield on Chinese junk bonds. And as you can see, it has spiked starting in about May and rising since then from 8% to over 14%. And this will cause stress on heavily indebted Chinese companies. And that in turn will make it more likely that they will default. So there is a developing credit crisis in China. Stuart.
Well, one point that the podcast was very keen to point out was that, in effect, China has been riding a tiger here. And how do you get off? How do you slow? How do you safely get off a tiger? It's very, very difficult. And if that's the macro story, the micro story for Evergrande is that if you've been issuing debt at 10 to 12% interest rates, you're basically betting on continued asset inflation to bail yourself out. And if that asset inflation begins to slow, the whole thing can unravel and you get a spiral working very aggressively against you.
Very good point, Stuart. So as a result, Chinese property developers are having to cut their debts, and also financial institutions are prohibited from lending to them. So this is net financing flows to China's listed developers. As you can see, they've gone into reverse.
Now, apparently, Evergrande have also been squeezing their own suppliers, not just in terms of paying them late, but requiring the suppliers to fund Evergrande's debt, buying some various of these financial products that are being pushed in China. So it's a very, very close nexus, which, as we were saying previously, if that begins to go into reverse, the whole thing can be absolutely miserable.
But Nordea are saying not to worry, that China has gone through various cycles of liquidity squeezes, which is the red line. That is the China's credit impulse 12-month change, and that is on the right-hand axis. But it really hasn't affected the Chinese corporate bond market very much. There have been small hiccups in the past, but it has always recovered, and they are expecting a small hiccup and then recovery. And so far, and this is data as of this Monday, contagion has been limited. So the light blue line is the bond price of another Chinese property developer, Country Garden. And as you can see, it has hardly moved, whereas the price of Evergrande bonds have absolutely collapsed and are now trading at below 30 cents in the dollar.
I suppose ultimately the issue is so political, isn't it? How much does the government want to nip this in the bud? How much does it actually want it to let it play out a bit to instill market discipline?
The thing is, Stu, how do you think the Chinese can keep a lid on this if contagion breaks out? So if bond yields start to spike, and this chart here shows that junk bond yields in Asia are rising, then what can they do to bring it down?
Well, I suppose ultimately the usual solution is forcing state-owned banks to, in effect, bail out the creditors of Evergrande. And of course, many of those creditors are the citizenry who are waiting for, their apartments. Apparently, there's 1.2 million people expecting an apartment, and there's something like 80,000 suppliers expecting payment.
Yes. And we should say that China has been here before. So there have been previous banking crises in China which have been covered up. And essentially what China has done is that it has repressed interest rates. So the yield that citizens get on their bank deposits is minimal, and the banks can lend out the money, make huge profits, and those profits can then be used to pay for any bad debts. So forecasting a crisis in China is quite difficult because it is not a market economy, and the Chinese state, by repressing interest rates, has been able to paper over all the cracks and kick the ball successfully down the road. And the People's Bank of China is currently pumping liquidity into the banking system to try and reassure markets and ensure that there is no contagion within the system. And we don't know how, but Evergrande has yesterday made a payment on its domestic bonds, but not on its international bonds. So it is getting that money from somewhere. And so far, global contagion has been limited. So the markets believe this can be contained. So this is European financial credit default swaps. And it's showing that European financials are showing very little stress. So markets are not expecting credit tightness in Asia to spread around the world. They're not expecting a repeat of the financial crisis. And Barclays have done some calculations, and they're saying that essentially Evergrande is too small on its own to cause difficulties in a Chinese economy with a GDP of 6 trillion, when total Evergrande debt is about 300 billion. And of that, the wealth management products which was sold to the public was only 43 billion, and accounts payable, which is what it owes to suppliers, is about 150 billion. However, I would say that I've heard all this before. In early 2007, when the problems were developing in the US housing market, and everyone said that these problems were temporary and they would blow over. And essentially markets kept on going up against my expectations. And it took a year for the knock-on effects really to become apparent. And the problem with financial systems, and China in particular, is they are incredibly opaque, because everyone has to all the time say that things are okay. Because the moment anyone admits there are difficulties, there's a run on the bank and a self-fulfilling crisis. So authorities and financial entities all have an incentive to just keep on pretending that everything's okay until they can't.
Well, Keith, I think that's exactly the risk, isn't it? That when these things begin to unravel, all sorts of things come out of the woodwork. Apparently, a lot of Evergrande's developments have actually been structured as joint ventures where they own 49.9% of it and therefore don't have to consolidate the debt on their balance sheet. That's one possibility. But I think at the bigger picture level, this is, like, how do you forecast an avalanche? You can't, but you know that the longer these things go on, the more the snow falls, the increased risk of an avalanche. And at some point, one snowflake will be enough to topple the system over. And this has been going on so long, it's been snowing so long, so much credit has been created, that the sort of fingers of instability must be really quite extensive. We don't know what will topple it over, but when it does, it seems likely to be very painful.
Yeah. And the thing about China is that its debts to GDP ratio has grown at an absolutely unprecedented rate. And when a country borrows this quickly, it is generally the sign of malinvestment. And so historically, when the debt to GDP ratio has risen very quickly, it is an indicator of a future financial crisis, as at some stage that malinvestment is revealed and the future income that everyone was expecting from the assets they've invested in fails to materialize. If you think of the Asia crisis in 97, 98, this is exactly what happened in Thailand. There's enormous property development, and then at some stage it's realized that a lot of it is uneconomic, and then you have a cascading crisis. But the Bank of International Settlements made exactly this point 5 years ago. So this is a chart from 2016. And as you can see, the red bar shows the debt to GDP ratio growth over the previous eight years. And China is right at the extreme of the distribution. And that has historically been associated with a very high risk of a financial crisis within the next few years. But that was 5 years ago. So forecasting financial crises is very difficult. All you can say is all the elements are there for a financial crisis.
And I think we can also add that every emerging market has at some point been through this sort of crisis as it has developed, and financial excess seems to be part of every development story.
Yes. And real estate development is an enormous part of the Chinese economy, much bigger than the rest of the world. So the red line here is China, and it shows that real estate development investment is above 14% of GDP, whereas for the US, it's around 5%. And for Spain, which you remember had an enormous investment bubble, then it peaked at about 7 or 8%. So China's real estate investment as a percentage of GDP is really unprecedented. And that has big knock-on effects for commodity markets, in that the Chinese real estate sector is now so big, it sucks in a huge portion of total global commodity supply. So its steel use is about 20% of global steel supply. It's also 20% of copper, 9% of aluminium, 5% of zinc, and 8% of nickel. So if there is a slowdown in the Chinese property investment, then you can expect knock-on effects in global commodity prices and them to fall.
Keith, I find this very disappointing. I was hoping commodities would be a safe haven from monetary chaos, instead of which this comes along and takes away the fundamental demand.
Well, precious metals may well still be, Stuart. You know, gold could be the safe haven. So in conclusion, construction is a disproportionately large share of the Chinese economy, and it can't keep growing at its current pace. The FT were reporting that there are enough empty flats in China to house 90 million people. So that is 1.5 times the population of the UK. And not everyone in China can have several flats and then sell them to other people who want even more empty properties. That doesn't work. So at some stage, the Chinese construction sector has to slow, and that will slow Chinese growth and is bearish for commodities. In addition, there is a credit story, and Evergrande can't repay its debts, and when it can't repay its debts, that is going to cause stress throughout the construction sector and throughout the financial sector. Now, we don't know the extent of the contagion. You're certainly seeing high yield bond prices in China rise, and that will cause financial stress on heavily indebted companies. But the analogy with the credit crisis of 2000, 2008 is that these crises develop slowly, and authorities will do their best to keep a lid on it until they can't. And so this is not a crisis that will develop tomorrow. It's one that will develop over the course of the next year or so as companies which were owed money by Evergrande get into difficulties, and the effects slowly cascade through the system until they can't be controlled by the government. Stuart, your thoughts?
Well, it is a very worrying position. I think that this whole analogy of an avalanche is what's most prominent in my mind. The fact that this could completely snowball. The other thing that I would add is that this reinforces how political every decision is in China, and therefore for every foreign investor, you have to really, understand that that's the sort of system that you're operating in. What are the political connections? What is the political backstory to everything? And seemingly in previous workouts of bad debt situations, the normal credit hierarchy has been sort of thrown to the wind, where equity holders have actually had their position protected if they are people of political connection, whereas debt holders have had to take it on the chin, particularly foreign debt holders.
Yes.
So you can't bring your normal assumptions to an investment landscape like this. You have to be very clear that you're in a political environment.
I think foreign bondholders will get very little. I mean, the Chinese authorities have been very relaxed about Chinese companies raising debts in Western markets and then running off with the cash. Now, good luck if you're a bondholder in Evergrande, you hold the dollar bonds and you try and enforce your rights. I think you're very likely to get nowhere at all. But whether the Chinese authorities can keep a lid on essentially contagion in China, we just don't know. It's such an opaque system. My strong prejudice is that their first thought will be to try and protect private citizens who bought the wealth products. But as other developers get into trouble, how much will they be able to control the situation?
Absolutely. Do we get an avalanche?
So on that cheery note, I think we'll call it quits there. So please can you press like and subscribe to the channel, and it is goodbye and thank you to Stuart Owen.
And it's also goodbye from Keith Jordan. Thank you.
Goodbye.
Goodbye.
Full disclaimer. The material and information contained in this podcast is for information and entertainment purposes only and should not be relied upon for making a business, legal or any other decision. We may own or have a financial interest in any securities mentioned. Listeners should conduct their own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. Whilst we endeavour to ensure that the information presented on the show is correct, we make no representations or warranties of any kind, express or implied, with respect to the podcast and website or to any information, products, services or related graphics discussed or presented in the podcast or website. Any reliance you place on such material is strictly at your own risk. You are solely responsible for the investment decisions you make. We will not be responsible for any errors or omissions in the podcast or website, including in articles or postings, for hyperlinks embedded in messages, or for any results obtained from the use of such information. Nor will we be liable for any loss or damage, including consequential damages, if any, caused by a reader's reliance on any information provided by the podcast or website. Please do not listen to the podcast if you do not accept self-responsibility for your actions.